Hello, I'm Mark Apsey, Head of Indexing and Thematic Research, and welcome to this week's Week Ahead. Before we get into this week, let's take a look at last week, which I like to refer to as the all-time week, because we saw all-time highs in NDX, or NASDAQ 100, SPX, the S&P 500, and of course the Dow. And the Dow finally crossed 40,000. It had traded above 40 earlier in the week, but hit that close on Friday. Also got me thinking about other milestones for the Dow, right? So we hit 40,000 on Friday, 30,000 we hit in 2020, and 20,000 we hit in 2017. And it was about 18 years prior that the Dow hit 10,000 in 1999. And in case you're morbidly curious, I have a data set that goes back to December 31st of 1900, and basically it took 99 years to get to 10,000. So it's interesting to see that as we move along, these all-time highs, the new highs for the Dow, are actually coming more quickly, I think, than a lot of people would expect. All right. Side note about the Dow, don't forget that it's a price-weighted index. So it does behave a little differently than indexes like SPX and NDX. Essentially, say there's a constituent that had a stock split in S&P 500 and NASDAQ 100, there would be no difference between one day and the next. In the Dow, basically, stock undergoes a stock split, its weight gets cut in half, and all that weight gets distributed to the remaining names in the index, right? The remaining 29 names. And then going forward, of course, you have a much different index, much different makeup. So we haven't seen this, and of course it's not happening now, but it is just something to keep in mind, that the Dow is a price-weighted index and can and will, in the right circumstances, behave much differently than anything that's market cap weighted. Okay, so last week again, all-time highs across kind of the big three. Unfortunately, the Russell didn't participate in that. And when we look at the broad sectors, right, we saw that technology ruled the roost, followed by real estate, and followed by healthcare. And that's actually interesting because in as much as the Magnificent Seven kind of ruled the airwaves, I guess, last year, they were really kind of the only game in town. So anytime that you ran a monthly, quarterly, any periodic analysis, it was either tech or communication services, which is where Alphabet and Meta live, or consumer discretionary, right, which is the home for Amazon and for Tesla. And so every time last year, it was one of those three. It was all those three on top and one of those three leading. This year, of course, we are seeing something different, and thankfully, there's more breadth in the market, and that's evidenced by even looking at the year-to-date returns for sectors. Top performing sector year-to-date, financials. Second top performing, materials, and then technology. Communication services shows up somewhere in the middle, and consumer discretionary is actually the laggard of the three. Now, mind you, Tesla's down almost 30% year to date, so that's not helping anybody. But again, it just speaks to the breadth that we are seeing in this market. Okay, so last week, overall strong week. Dow up 124, S&P up 1.5. NASDAQ Composite up over 2%, and of course the Russell, while not hitting all-time highs, was still up 1.74%, right? And a lot of people will look at Russell returns as a measure of a breadth as well. Okay, so looking ahead to this week, well, we usually talk about earnings, we talk about econ data. Essentially, we've just come off Q1 earnings. We've seen that roughly 75% of names exceeded their estimates, which is impressive, sounds impressive, and is, but is honestly kind of in line to slightly lower than regular expectations. So again, exciting to see, but not kind of headline grabbing, right? Also, in terms of econ data, excuse me, it's kind of a light week. We're going to get Fed minutes on Wednesday. We'll get PMI, both services and manufacturing, from the folks formerly known as market, and those numbers are expected to tick up slightly. Right, I think they're like a 53 and 54 handle respectively. Honestly, the only thing to pay attention to there is if there's going to be any surprise. And of course, with the PMI figures, regardless of where they're coming from, 50 is your kind of magic number, right? Where 50, anything 50 and higher is indicating expansionary. Anything below 50 is a signal that there's a contraction going on in the respective area, right? Later in the week, we'll get some more employment numbers, we'll get some more housing numbers. Essentially, there's no big expectation of any big changes there, right? So, from our perspective, we're looking for, you know, barring any major surprises, don't see that there's going to be anything crazy going on here, right? The inflation outlook has been kind of tempered. We did see the Fed come out a little while ago and say, hey, not only are we, not going to be cutting, but there's possibility that if we need to, we will hike, and everybody kind of got a little excited there. That died down. But honestly, don't know that I see anything major happening to change that conversation, right? So I think coming into the end of May, we are looking at, like I said, status quo. I wouldn't be surprised if we saw a slight pullback from these all-time highs, but nothing major. And honestly, I think the market's just going to wait for the June numbers to come out. And then, of course, in July, we're going to start Q2 earnings. Okay. Talking about models, last week, honestly, the one model that I would not have expected to make the leaderboard was the one that did, which is our space economy model. For those of you who were following us, you know that up until last week, space economy was down about 30% year to date. And basically, there was a deal that was announced between AT&T and AST Space Mobile, whereas AST is going to provide, I guess, the backbone to enable satellite calling on AT&T customer phone. It's not going to happen overnight, but they did announce an agreement where that is going to happen. Kind of a big deal because up until now, sat phones have been their own thing. Of course, growing up watching movies in the 80s, we all saw sat phones basically whenever anyone wanted to call on an airstrike, and they would get on the sat phone and call it. Apple, I think in their iPhone 15s, has the calling capability where if it's an SOS situation, a 911 situation, you can make those calls. I know I was on a flight just last week, and I noticed that my cellular service went out, and I saw a little picture of a satellite on top of my phone. But in terms of broad adoption and a network like AT&T starting to use it, it's kind of interesting, and it is kind of a big deal. Another model that we saw had a good week was our nuclear energy and uranium model, and this is one that frankly we've been paying attention to probably the last 18 months to 2 years. The dialogue around renewables has shifted dramatically, right? A decade ago, renewables were going to save the planet. 5-7 years ago, they were still going to save the planet, and more recently, people are starting to realize that there are costs, there are kind of carbon footprint issues with the not only the manufacture of all these devices, but their end of life as well. And not to mention, again, ongoing issues about intermittency, whether it's wind with wind power or, gee, what happens when it's nighttime. Unfortunately, our electricity storage solutions aren't up to par with our demand for consistent electrical output. And I think a lot of folks are coming around to the realization that nuclear energy, for its, let's say, checkered past, it is still something worth looking at. And again, with proper oversight, proper construction and operation, will potentially provide exactly what we need here, especially with the idea of whether it's AI, whether it's Bitcoin farming, whatever the huge forecast demand is, it's something that many are starting to believe that nuclear energy can fulfill. Okay. So again, just to recap, looking at essentially kind of status quo, I think, up until we get into June and certainly into the summertime. And not thinking that there's going to be any huge moves in the market this week. Of course, never say never, but honestly, given the light econ data, given that we're basically out of Q1 earnings, like I said, I wouldn't be surprised to see a flat to slightly down market on the week. But that's about it. All right. Thanks for paying attention, and we'll see you soon.